Just in case you thought the meme stock craze had gone away, it was back with a vengeance over the last month or so. Here we got AMC Entertainment pushing up to, $75 a share in early June after being stuck around $12 to $14 a share. So what next? What could July hold for AMC? Further gains or actually time for a dose of reality? It's been quite a year for the AMC Entertainment stock, of course. It came into the year trading around $2 a share, then touched 20 during January, then pretty sideways, and it sparked back into life and a bit more since the end of May. So I thought, let's take a look at it in a bit more detail, see what's been going on, see if there's a way to make any sense of these absolutely enormous movements in the stock price. So as usual, I'll talk about what's been driving it so far this year, what to look out for, and then we'll come back onto this and look at things in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on AMC Entertainment. Of course, popular meme stock, taking a look at what's been happening a lot during June and what might be happening during July. So as usual in this video, I'll talk a bit about some of the recent news, then we'll jump back onto the platform and take a look at things in a bit more detail. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel, and it means we can continue to push out 3 different videos every week on the different stocks that we look at. Okay, let's get into it and catch up with what's been going on with AMC Entertainment. So of course, AMC, a lot of focus this year. They are an American cinema chain, and it's the largest chain in the world. But that's not why they've attracted quite so much media and investor attention. If we wind the clock back to the end of January, the stock price had touched $20 a share, and that's from being around $2 at the beginning of January. A phenomenal rise. And of course, what was behind this, back then we had the popular Reddit discussion board, Wall Street Bets, were looking at stocks that had large short interest. So had lots of usually institutions betting against the shares, expecting the share price to fall. And what some of the investors and traders on Wall Street Bets did would target some of these stocks with large short interest, buy up the stocks in the hope of sparking off a short squeeze. Where the price moves higher, the institutions and hedge funds have to close their short and drive the price higher still. So we saw this with AMC and GameStop, of course, earlier this year. And then it seemed that that was it. It was all over. The share price went fairly quiet for a bit, but all this changed during June. So back at the end of January, the stock had touched $20 a share. We've seen it trade as high as $72 so far this month. So again, it's become the meme stocks have come back into focus, and another surge from smaller investors driving the stock higher. Not surprisingly, the company has taken advantage of this. It's sold hundreds of millions of dollars of its own shares, and it says this is a way of raising funds to help it ride out clearly the difficult times it's been in over the last year with various lockdowns around the world. Clearly, it's not been a good time for the cinema business, so it's used this much higher share price as a way to raise cash. But the company is still carrying a significant amount of debt, so this does mean that plenty of analysts think the company is still overvalued. I think the average target price is less than $10 for the stock, although that doesn't mean much with the stock trading at $72. So can it go any further? I have to say, it's a difficult one, almost an impossible one to call. Stocks like this that suddenly triple in value and then might halve in value during the day. It is something of a lottery ticket. But let's look at the levels to watch and then jump back onto the platform. So I think the most immediate hurdles on the upside, the highs we've seen during June, $65 a share, and then up at $72, just above there. On the downside, again, because of the volatility, we've seen major lows in June ranging from $28 at the beginning of the month to above $50 more recently. So that gives you a picture of the sort of volatility we're talking about, and it is pretty much off the charts. But let's take a look at the charts and see if we can make any sense of this. Just to put all this in perspective, I thought, well, let's take a look at the last or is it 5 years or so? And you can see just how extreme the moves have been over the last few weeks. If we thought that January was explosive, it's been nothing compared to what we've seen for AMC late May and early June. So just blasting higher. I think, as I said, it's very hard to make any sense of these sort of moves. I do view some of these stocks as something of a lottery ticket. If you're in them and you make a lot of money, more power to you. But I think it is difficult to apply sensible sort of analysis. When we see these sort of moves, let's take this day here, 3rd of June, the price was as high as $75 and as low as $37. So it halved during the course of the day. Opened higher, pushed a little bit higher, and then at some point it was down almost 50% from the highs from the day. So I think it is difficult to apply any sensible form of analysis. But perhaps let's take a look at some of the short-term movements. So here's the hourly chart from the 3rd week of May and the run-up. And you can see since then we have been stuck broadly sideways. I think if I was looking at this, I probably wouldn't pay too much attention to the idea of overbought, oversold. It's probably more about the price action. And we can see on here, after we had this burst of volatility where that price touched 75 and then traded back to 37, we've seen it it's stuck in a range. It's not the tightest of ranges. We've still seen some decent swings there. So we've got highs coming in from sort of 60 through to 65. I think if we broke that, we could well see some more momentum come back into the market. And some technical analysts might think we target $75 a stock. Again, if we broke that, when we see breakouts in some of these meme stocks, it can really inspire the element of FOMO, the fear of missing out, and everyone piling in. So I think if it was to break $75 a share, it'd be an interesting one to watch. On the downside, we've had more recent support over the last week or so coming in around $50. So again, I think if we broke below 50, we could see a bit of pressure on the price. And the really big support really runs from about $35 a share, 35 to 40. So I think, again, some aggressive traders may be taking the view, well, if it pushes down to here and we see some buying come back in, perhaps I want to be a buyer as well. So at the moment, it is stuck in the middle of the range. I think there are areas we could trade this from a short-term point of view. I think putting a longer-term target on it is somewhat meaningless at the moment, but I'd definitely be watching it in the 35 to 40 zone and the 60 to 65 zone to see how it reacts. And that's, I think, trading on these extremes could be where the opportunities are for some. That's it for the update in AMC. They've got earnings out in early August. We might come back to them after that, see how they fare. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.